Vincenzo'S Go Crypto Investing, September the 26th, I believe, 2025, noontime cryptocurrency, blockchain technology, gold, and silver bullion video. As you join and participate in our mission and goal and my journey and yours to become asset millionaires via gold and silver bullion and mining stocks, 401k steady investing, real estate, cryptocurrencies, cash on the side, earning 3 to 5% in CDs, bonds, treasuries, for peace of mind, emergencies, and most importantly, buying a new or accumulating into an existing asset, right? And that's what we're trying to do here, and that's how we're becoming asset millionaires, along with living below your means. And as you increase your income, you do not increase the standard of living along with it. You invest that new money, and you increase the standard of living later by staying out of debt, no car payments, buy a used car that you can afford with some cash, right? Doesn't have to be a $50,000 car. It's going to lose 90% of its value in 10 years, right? Buy a $10,000 car. I bought a used truck 7 years ago. It was a $58,000 truck, brand new. I bought it for $30,000. Still overpaid for it. I should have bought one for $15,000. But it's 8 years later. It's been paid off for years, and it's running great, drives great, right? And I'm saving all kinds of money, not shelling out $600 a month, $800 a month on a car payment. It doesn't make any sense. So that's how our philosophy, and one of the reasons you're here, is our education and information that we have and that we do, and our game book and playbook to become an asset millionaire. And it's just an overall philosophy and a way of life, right? And that's why you're here, trying to get educated and trying to learn. But as we look at the Bitcoin price, if we see if there's any news, and there has been some news, strategies, Michael Saylor reveals his main Bitcoin principle in only 2 words. Bitcoin has been plunging for quite some time, and as you do know, I've made no bones about it the last couple of years. I see this ending very badly for MicroStrategies and a whole bunch of other companies that have turned their companies and businesses into quasi-Bitcoin treasuries, which means if Bitcoin ever goes into an extended bear market, or if Bitcoin ever crashes and doesn't rebound, these companies will go under. It'll force liquidations, and it'll cause a cascading feedback effect on the overall market, and it has infested and infected the rest of the economy outside of the crypto sphere now, to where it could drastically be a trigger or a fuse that starts the next financial sovereign debt crisis. Michael Saylor posted 2 words on Thursday: be unstoppable, just as new rankings confirm Strategy's unmatched lead in corporate Bitcoin holdings. The company now controls 639,000 plus Bitcoin, worth more than $70 billion. Bitcoin trading around 109,000, right? So Michael Saylor keeps buying, but every time he buys, he's getting closer and closer to the current price being his break-even price, because he's got to be getting close now. I remember at last check, he was in the 70,000s for average price, so now he's got to be close in the 80,000 in an average price, right? So it's very dangerous. And if we look at what's going on as we move along here, we are on my lunchtime break. If we look at, get out of here, we don't want to buy that. We talked about the Bitcoin price earlier. Let's look at the XRP price and see if there's any news in the XRP price. Bitcoin ETF suffered $280 million outflows. Ethereum bleeds for 4th straight day. Is a major crash imminent? XRP lost most important support for $20. If we look at Maxi Doge, $2.5 million pre-sale hits the spotlight as XRP loses 6% and Bitcoin falls 109,000. 925,865,000 XRP in 24-hour puts XRP back around the billionaire club. XRP $3 fake out. No real news here today or yesterday. Let's look at the price. If we look at the price, you can see The price obviously hasn't changed much from what we talked about earlier. We're going to scroll some of these altcoins too for you while we have some time. You can see we're in this consolidation in the decision point now for the XRP price in the short to medium term is what are we going to do? Are we coming down to 215 and then 162 and potentially towards the end of the year this $1.20? Or is this going to get bounced on somewhere between the 255 and the 213 and then we're going to continue the uptrend? In the short term, I think we have to come down to at least the 255 and more than likely the 213 that we must retest in the short term. And the track does show that. It did get that beautiful pump in the return rally. It showed it, right? We didn't believe it as much. We thought it could pump a little bit, but we didn't think we were going to do what we did there. But you can see the track showed it a little bit ahead of time, and then obviously the track shows it coming down a little bit ahead, but you can see the price has come down ever since that blow off top in middle of July, right? So that's what we're looking at there in the XRP. The XCon continues. I think the XCon is coming down to the 0.00800 in the short term after it got rejected off of that mountain double top, and that's why we came out here and we're here for the retail trader. Everybody else was telling you to buy back here. We were telling you do not buy if you have never bought. And if you had bought, ride the pump and make your own decisions on the way up where it could go. But we thought there would be better buying opportunities, and you can see immediately it went down about 75%, followed by a reactionary pop, and then a stagnant fall to the downside. I expect another big dump and then a pump, and I think this thing is going to continue to fizzle out, and that's what it's doing as the momentum has died. And this was, to me, just a massive pump and dump from to where people knew they could make a ton of money here if they loaded up and create a hype cycle, and they did, and now it's deflating, and it's not deflating fast. It's one of those long, drawn-out, painful deflations where people are thinking it's going back to new highs, and potentially it's not. XDC is another one that, unfortunately, if it slips these moving averages in the daily, which it has, and it's significantly below the 200-day now, 0.0552 is your next move, followed by potentially 0.04 if it doesn't get supported by the 0.55, right? And in order to start to get bullish again, you have to get back above the conglomerate of moving averages that are sitting right next to each other, right? But until then, you're going to continue moving to the downside. The same thing with the H-bar, the moving averages, and a lot of these coins now are getting bearish, where we are deflating now after our 34-cent reduction, and it appears now that we will be coming down to the 0.15 cent level, and then that would be an area you need to hold, or else you could come much lower down to the next major area of underneath support, which is the 0.080. Oh, and I did do something on the silver chart because silver has been heavily manipulated, and I've added some things on here that are very interesting, some major manipulations and some major things that have happened over time. And you can see back here, starting with the silver chart, all the way back here in the early 1900s to 1918, and I got more to put on here, but this is all I could do. Pittman Act of 1918 forced U.S. to sell 350 million physical ounces of silver, mostly to Britain. Why would we have to sell? Why would there be a law to force us to sell a bunch of bullion, and specifically forcing us to sell a vast majority of it to Britain, right? You must ask yourself, and then you can see the price of silver collapse. Then if we move along, and there's a lot more things in here that I can put, but I just started, then you can see going into more recent times, 1990 to 2000, J.P. Morgan, large banks, massive short positions they built on it. But first, I forgot up here, you can see 1979 to 1980, Hunt Brothers buy all physical silver, create short squeeze. They were trying to buy up the physical bullion so it would force the price up in a squeeze, and it did. The price went up 944% in about 2 years. And after that, the big banks went in and did what J.P. Morgan did here, and they started in the 1980s to load up on the physical puts, right, to put the market, and they did, and they forced the price of silver bullion all the way down from the $50 all-time high, and they put it all the way down to $3.44. And then after that, you had a 2008 silver crash due to shorting paper silver manipulation, and it caused a 58% crash. And that was coincided with the financial crisis, right? And then after that, you had 2011 silver shoot to near all-time highs of $50. Then COMEX margin hikes crash price shortly after. So we were off to the races, and then the COMEX on the paper trail hiked margin, which forced the dump of contracts, and it manipulated the price of silver down 72%. 2015 U.S. fines several banks, Deutsche Bank one of them, as a big time for precious metals price manipulation, and that was part of the 72% crash, which was part of the margin manipulation where they hiked rates, along with major banks around the world, and the Deutsche Bank just being the benchmark of the name brand banks that we're using here, and that helped crash the price of silver from near an all-time high, again, down 72%, all the way down to a swing low of $11.74 during the COVID dump, I believe. Yeah, the COVID dump. And then since then, you can see the price of silver has rebounded, and the price of silver now is squeezing out all the fake paper silver contracts to the downside, and it's forcing the price up along with other market conditions and geopolitical tensions, and it's going to hit our target of our cup and handle target of $75 to $100. I think it'll hit $75 by the end of next year. It's about to hit our initial target of $50, a target that we made way back here just after the COVID capitulation, on the way up at about $16.50 to $17 for silver bullion ounce. We said it was going to $50, and then we showed a $200 target based out of the cup and handle, and then based out of geopolitical and inflationary price and corresponding it to where gold is, it should be closer to $500 to $700, but that's for later on. In the short term, 50 is about to be hit, one of our targets. Then 75 will be hit, and then our technical target out of the cup and handle. Right there, you can see it's a 2-decade-long cup and handle, which brings the price of silver bullion all the way up to $200, right? If we take a little bit of look at some news that I think it's very important that you guys look at, you can see what we can see. Will the government, because I believe that the next leg of this crypto bull market, as I believe we're having a mid-course bear market and retail fake out to get you to sell out right before the third and end game of this current leg of the bull market takes place. It's all about quantitative easing, because quantitative easing, or QE, is where the government expands the money supply in the physical market, where they inject physical money into treasuries and government bonds, right? But they haven't been doing that recently. And we don't have a definite date for the Fed starting large-scale purchases of treasuries QE style, but old Vincenzo has been touting that he believes it'll be at the earliest the end of the first quarter of 2026 or the springtime, leading into the very early summertime of 2026. We believe they will be starting to do that, but not until then. Since mid-2022, the Fed has been fighting inflation with quantitative tightening, or QT, letting securities mature and not fully reinvesting principal. In March 2025, the Fed decided to slow the runoff, reducing the monthly redemptions cap treasuries from $25 billion to $5 billion. Analysts and market expectations: some large banks, fund managers expect the Fed's downdrawn of bond holdings, i.e. the runoff, to end around February 2026, slightly earlier than old Vincenzo thinks. They might let them all run off, but old Vincenzo doesn't believe in gold crypto investing here, doesn't believe that they'll start buying until at the earliest the springtime of 2026. Others had earlier expectations to QT phasing by the end in early 2025, but as of mid-2025, that has been pushed off, in line with old Vincenzo's gold crypto investing's current and earlier thinking. They're falling in line with Vincenzo's gold crypto investing. Once the Fed deems reserves are no longer abundant relative to its target, there is no need to support financial conditions or stimulus growth that may shift to net purchases or resume more aggressive reinvestment, which is QE, or quantitative easing. And that's when the crypto prices can shoot up because it would be new money getting injected. The Fed must first stop reducing its holdings, monetary policy easing. If inflation decelerates and growth softens, the Fed may cut its policy rate. That would increase the incentive for complementing cuts in balance sheets, which we're not having any of that. And we're still cutting we're still cutting rates, even as inflation grows, right? And the economy is strengthening. If markets begin, which would heighten inflation, because we're injecting more money and making cheap money and loaning money into existence is the other way they do it, and that heightens inflation by having more currency to buy the same amount of goods, forcing a shortage or scarcity, which has to force the price up. Official communication, given the current trajectory slowdown, the Fed ends the runoff in late 2025, early 2026, when its balance sheet shrinks to its target, 6.2 trillion. So it's in line with what we're thinking here. I'm going to let you go. This video is quite long. I want to get it updated and uploaded, and I have to get back into work, and my lunch break will be ending. Peace and love to my beautiful audience. Direct Eyebrow J.